What is up, guys? Welcome back to the channel. We are going to talk about cycle analysis today, but we're going to be looking at volume. The next POI that we have set up and that we've been tracking here is end of July going into August. So I went ahead and split these smaller phases here to separate sections so you guys can see what's going on and how the cycle works and how volume applies to picking up these points of interest and being able to predict these volatility zones using not only volume, but basically everything else that contribute to what cycle analysis is. So this is just one piece of the puzzle. All right, so we have a blue section, we have a pink section, a yellow, and a green. Okay, so these are all split up according to their individual time sections. Here we have a 20-day setup in blue. We have a 52-day setup in pink, a 40-day setup in yellow, and then we have about a 10-day setup here on the 42 bar section in green. Okay, so I want to talk about the March 29th scenario. So the March 29th scenario was a strategy that these guys used. The strategy was to create a setup here that would last 120 days, and within that setup, create these patterns, okay? So these distributions and accumulation patterns for the benefit of the hedge funds, right? A strategy that would allow the shake off of longs retail traders that were in on the stock, right? So after we broke out of this pennant, we got shorted here in November, okay? Before making that next rise here in March. So I want to apply this setup here and this strategy over to the current cycle, because after a 120-day cycle plays out, there's a new cycle, right? So the 62-day cycle can be used to confirm these as well. Remember, the points of interest here are there's a lot of different factors that go into it, and this is a very important one, okay? So basically this strategy here is when you are hedging a position, okay, as an institution, what you are doing is basically preparing yourself for the future, right? Anything that happens in the present is a result of what happened in the past. This is why the option chain is very important when doing this analysis. You can see right here with volume how these spikes here, these volatility spikes in volume, so heavy volume coming in, relate to each other on these sections, right? The blue section behaves very similarly to the next blue section that is happening back here in May. May of 2022 is very similar in volume to December of 2021. Now you can tell that these patterns are not the same. They don't look the same whatsoever, but they have the same volume, and that's what's important. You're not going to find the exact same pattern on these setups, and I think a lot of people might be confused by that idea. But it's something to understand for this to make sense, okay? So most of the time what you're going to get is you're going to get the inverse version of a pattern that is playing out in the past, okay? You're going to get that in the future. Sometimes you will get identical setups or flipped setups. So for example, here in the pink section, we take this pattern, okay, and we flip it right over. Okay, now we're dealing with a different setup here, but it's the same structure of a pattern that is playing out. So what we can do here is we can understand that back here, these hedge funds, they were preparing, okay, from December 20th through February 10th, they were preparing for basically all of June going into July, which is where we're currently at, right? We still have a section here that has not been filled yet. Now, something important to track here and understand is that the volume here is very similar with each other, right? So these sections correlate with each other. And basically what we're trying to do here is figure out how the volume here is to be applied to the current cycle and how we can use this volume to predict the next candles, right? And this is a good way to predict price levels, right? I always say that predicting price levels is a dangerous thing to do. And I avoid giving like price targets more than trying to actually predict the zones, because predicting time zones, in my opinion, is a lot easier than predicting a price level. You use technical analysis later to figure out the correct fib levels, to figure out how the price can potentially get to that level using the option chain as well. But volume, what it does is, well, if you know that you're headed to a certain point in price and you start crossing these volume sections out here and basically doing some math to try and figure out how much volume these guys were using in the past to get the price to X amount, right? If we know that there's X amount left in volume and this cycle does repeat itself, okay, this 120-day cycle repeats itself, then we should have the POI play out here towards the end of the month as we've been tracking. But now we're using volume to see how much volume is left and how that can affect the price in a positive way, right? Because things are very bullish here. So now that they've shorted the stock down here, and you have this mid phase that basically played out in this entire pattern, which is right here, March 29 scenario, you'd have a sort of double bottom setup on the macro scale, which is a macro projector pattern, right? A macro projector pattern that we've been talking about here on the large scale, on the weekly, on the monthly chart. So we have about 3 billion right now left in volume to cover up this pink section back here. So this is where the percentages come in, and this is a very important part to understand how this behaves, how this works. So now that we know that this 120-day setup strategy is something that has been repeating itself, another way to confirm it is using percentage ratios. Okay, so how much did the stock increase or decrease from the previous cycle, and how is that affecting it inversely in the future? For example, let's go back here to the blue section. Okay, we have a negative 45% decrease. Okay, and if we take this same pattern here from high to low and apply it to the blue section that happened here in May, we have a 45% increase. Okay, so you get that? We have the same volume, similar volume, and same percentage values. Okay, same thing with the yellow, right? The yellow is a 51% increase here in February to March, and then we have the same thing coming down, 52% decrease from April to May, right? Very similar again in the way the volume behaves. Similar volume, similar percentage levels, inverse. And this is where you get the flipping of patterns, right? So on the March 29 scenario, I talked about how these patterns that are playing in between can be exchangeable between sections. So one pattern here might show up in the pink portion versus the red portion, right? The important thing in that pattern is the volume, not the pattern itself, but the volume. Because if you display this volume, say a month apart, 2 weeks apart, on the macro scale, you're still going to have a double bottom setup, right? It's not changing what's this double bottom setup. Ultimately, what you're trying to do as an institution is create a large enough pattern. This is why I think it's important not to try and predict on the micro scale what a pattern is going to be, but focus on what the macro is going to be. Because in between, right here, this is considered noise. These patterns that are playing out on the micro scale are considered noise in the cycle. What you should be focusing on more than anything is the large volume candles. Okay, these are macro POIs, and these are important to track because that is likely where the price is going to be released in the end. The most important are always going to be the beginning and the end of cycles, because that is where you have a macro shift in direction. So the green section had 100% increase from March 21st all the way to March 29th, right? That was a 100% increase from the bottom. It was 166%. So we have here till August to complete this 240-day cycle. Okay, and what is it going to do here, right? Well, if we apply the same volume, okay, that was previously used, then we would have a similar double bottom setup. We would actually have the price increase all the way up to around the $36 range if we were to follow this trend, right? Because when you're accumulating this volume and suppressing this volume, you get to choose as an institution, if you're manipulating the price, you get to choose where you're going to release this volume according to the layout you want to play out in the end. So here we have them potentially choosing a double bottom setup on the macro scale, which means that we should hit the $36 range by the end of July. And this would make sense because that's a macro POI. Now, this doesn't mean that we're going to squeeze again on that last marker. It just means that it's likely that they will release this volume towards the end of the month. All right, so this is a factor that you have to consider when doing cycle analysis. So here, the setup that I have moving forward is towards next week, we should see the $17.50 to $18 level if this entire portion here, this pink portion, plays out to the upside and fills in what is this 58% increase inverse to what happened back here, right? The 1.56 billion in volume should be filled in. Again, these are not going to be exact, but they're very close together. And the ones that haven't been filled yet, well, obviously those are the ones that we're trying to predict here, okay? So after this is done, it's important to see how the price behaves to set up for this squeeze, right? I talk about how volume is important when breaking out. It has to break the algorithm basically, and you get that opportunity when you reach the projector pattern. You guys know that the projector pattern will come up, then come back down to establish support before making a run. Most of the time, you will see a projector pattern play out before you get a major run. Okay, and that would be the indicator, for this potential run here in the next couple of weeks. I'm always going to lay out the POIs for you guys, but there's only two that we're tracking right now, and it's end of July going into August and end of September going into October. That would be the next one. So after this happens, depending on how this stock behaves and how we come down, test support again, we will go from there looking at the next levels to track. But I do see a scenario like this being a high possibility using cycle analysis. All right, guys. So that will be it for today's video. The website now has a cycle tracker, so you can use a cycle tracker for free on AMC, and you will be able to update the POIs every single day that I post. If you also want to utilize that with other stocks, there's the interactive section, so make sure you check that out. But I will see you guys next time. Like and love you. Bye-bye.